BlackRock has already stated Ethereum is essentially the default choice for institutional tokenization. Something like 80% of tokenized assets exist on Ethereum. I look at Ethereum kind of like a platform. Like the internet's the platform and you can build anything that you want on it. Layer 2s are Ethereum. That is my view. Fusaka, it's just one upgrade on a 3-year roadmap. I think that the more that the world adopts Ethereum, the more that Ethereum becomes critical financial infrastructure for the world.
I just sat down and interviewed Leo Lanza. We talked about everything Ethereum, from the Fusaka upgrade to Vitalik to everything in between. If you're a holder of ETH or you're just curious and you hold alts as well, watch this video. You're not going to want to miss it. This could impact your bags. And before we get into the video, I just need one thing from you real quick. Make sure to subscribe to this channel and like the video if you felt like you get value from it. Now, I appreciate you guys for sticking around and watching this video and tapping in. So without further ado, here is my interview with Leo Lanza.
Welcome back, everybody, to another episode of the Coin Zone. I'm your host, Crypto with Paul. We have Leo Lanza here with us today. Leo, appreciate you joining the channel, man. How are you?
Doing good. It's just getting back from a trip from Alaska, so hitting the road with a podcast. So yeah.
Yeah, I'm glad you opened up with that, because when you told me that off camera that you went to Alaska for 2 weeks, that's pretty cool. So yeah, appreciate you for sharing with the audience.
Yeah, absolutely. It's a great place to go visit.
Cool. So let's get right into, I just want to talk about Ethereum for the most part, just to open up, and then maybe branch off to more altcoins and some Solana questions, stuff like that maybe. But just off the bat, I think Bitcoin is positioned as digital gold, right? And then people use this analogy for Ethereum as digital oil. So could you maybe explain to anybody who's trying to understand that, how is Ethereum like a digital oil per se?
Yeah, so it's basically just a loose analogy to try to get people to have something to kind of anchor to. It's not exactly like oil. There's not really a perfect analogy that you can attach to it, but oil is the closest thing that we have. And so then you can kind of just reason off from there and try to understand the different parts of it.
Gotcha. Okay. So in terms of tokenization on Ethereum, that's something that has been really picking up, I would say mostly 2025, and I think could be a very big industry. I think Tom Lee is very bullish on it. How big do you think Ethereum is in onboarding tokenized assets, real world assets, et cetera, what it might be?
Well, BlackRock has already stated, it was Robbie Mitchnick, that had said that the Ethereum is essentially the default choice for institutional tokenization. And I believe it's something like 80% of tokenized assets exist on Ethereum. So they are the dominant player, and I don't see that going away anytime soon. I look at Ethereum kind of like a platform. Like the internet's the platform and you can build anything that you want on it. You can do YouTube videos, you can do Netflix, you can do stock trading, all sorts of things. And so that's how I view Ethereum, is it's essentially a platform that everybody's going to build on, and they can build anything from tokenized games to tokenized like RWAs and whatnot.
Yeah, absolutely. I've heard people use the analogy before. It's like the App Store on your Apple iPhone or Google Play.
Yeah, exactly. Right.
Yeah. So let's talk about the Fusaka upgrade. It's, I think, just like 2 months away. What specific improvements do you think that is going to bring in terms of maybe ETH scalability, and it kind of addressing certain critical issues, I would say, like congestion? I know Kevin O'Leary put out a video recently talking about that and how he prefers SUI now instead. But what can you say to the Fusaka upgrade?
It's a really big upgrade for scaling. And from my understanding is it's mostly directed towards the layer 2s. And layer 2s are Ethereum. That is my view. They are, if they are not Ethereum, they wouldn't be called Ethereum layer 2s. And layer 2s, they give you exit rights, meaning that if you have assets on a layer 2, you are guaranteed to be able to exit down to the layer 1. And that's a huge value mechanism for a layer 2, because it gives you that guarantee. It takes away the counterparty risks. So one thing that large financial institutions are concerned with is that if you have a centralized L1, for example, that introduces another party, and that's a counterparty risk. And so on Ethereum, because it is so decentralized and because you have those exit guarantees, it mitigates that counterparty risk for these large financial institutions. But getting back to the Fusaka, it's just one upgrade on a 3-year roadmap. If you go to Grow the Pie, I believe it's growthepie.com, they actually just put out a roadmap for scaling the layer 1 Ethereum to 10,000 transactions per second, and the ecosystem to 1 million transactions. I believe it's 2031. I believe that's the date.
Gotcha. Okay. So could you maybe walk us through then, I guess like a real world example of, I know because you've highlighted before Ethereum's layer 2 offerings, and they're essentially free transactions per se. Like Base or Optimism, they're outperforming competitors like Solana as well. So could you maybe just talk about that and break that down a little bit as well?
I'm sorry, say the question one more time. You want me to talk about the fees for layer 2s?
Yeah, the solution offerings for layer 2s.
Yeah, so basically you have all these different layer 2s, and what they do is they batch transactions, and then they eventually will settle back to the Ethereum layer 1. But the advantage to that is that these financial institutions have full control, and they can essentially customize the fee structures. That also gives them control over what's called MEV, which is basically where you reorder blocks in order to extract a profit. And that's very similar to what we see with payment for order flow with like Robinhood, for example, where they reorder trades for to extract a profit.
Gotcha.
Does that kind of answer what you were?
Yeah, absolutely.
Okay.
So how about shifting towards maybe like the ETF route now? That has honestly been another big wave that the crypto industry as a whole has seen. Obviously, it started out with Bitcoin first, branching into Ethereum, and now it's growing from there. But how big do you think the influence is that institutions and all these billions of dollars coming from the entities like BlackRock, as you said, is for Ethereum and crypto as a whole?
Well, I think it's a really big deal because it opens an avenue for like 401ks to start investing. And so once you have that continuous spot bid the way that you do on the S&P 500, that's structural demand. And so this is essentially just an avenue for these types of investors to finally be able to buy. Because like grandma, for her retirement, she's not going to want to go onto Coinbase and have to have a hardware wallet. So this is just a whole avenue for them to actually be able to invest their capital.
Yeah. Do you think we're going to see a big shift into a lot of those 401ks that have just been solely stock market, seeing a dip into cryptocurrencies? Or do you think a lot of, I guess maybe the older generation is still going to be a little bit hesitant, and it might just be millennials that end up bridging that gap?
I think that it's going to take time. I don't think it's going to happen overnight. Older generations, they tend to kind of lag technology and have trouble understanding it. But if we have financial advisors that start to essentially pitch it and explain it to their clients, or a lot of times people don't even know. Recently my stepmom, she was asking me to look at her retirement, and I was looking at what she had, and she didn't have a clue what she had in there. So I think a lot of it's going to come down to who's managing the 401ks. So like if you work at a company, usually they hire that out, and they have this firm that is actually managing it and deciding what's going in there, and you can call and talk to them about it. But a lot of times the average person doesn't actually know what's in their 401k. They don't break it down the way a financial advisor would, for example.
Yeah, absolutely. So do you think then, I think 5% of the ETH supply now is in ETFs and treasuries. We now have guys like Tom Lee who are very outspoken about their adoption of Ethereum and honestly completely changing the face of a company from a Bitcoin basically facing company to an Ethereum one. Do you think that trend is just going to continue from here? We're going to see more Tom Lees, more Michael Saylors?
I think so. I think that the more that the world adopts Ethereum and that you see tokenized real estate deeds, leases, the more that Ethereum becomes critical financial infrastructure for the world, the more that people are going to see that ETH is the collateral asset that's securing not only the infrastructure, but it's securing the ownership rights for all of the world's assets. And that's kind of the end state where I see Ethereum going.
Yeah. And they also control a lot of the stable coins that are built on blockchains. So how does the Genius Act kind of play into Ethereum and stable coins and that whole situation?
Right. So basically what the Genius Act did was it said that, hey, the speed limit is 70 miles an hour. And so now people know how fast they have to go. They know what the rules of the road are. And we also have the Clarity Act that is going to also kind of lay the rules of the road. And what that does is it takes a lot of regulatory risk off for financial institutions, because you got to think, if you're managing billions and billions of dollars and you're exploring some new avenue, you don't want to have some sort of regulatory agency knock on your door and say, hey, you got to shut this down. I know you spent a whole bunch of money developing your infrastructure here, but we're not going to do this. And so now that regulatory uncertainty and red tape has kind of been lifted, we're seeing stablecoin adoption just go completely vertical. And I think a lot of that has to do with, and I'm exploring this with what's going on with gold. I think that a lot of that has to do with the government wanting to increase demand for U.S. treasuries. And we're seeing China just massively buying gold and selling off U.S. treasuries. And so I think that stablecoin demand could offset that a little bit, but we really need to accelerate adoption in order for that to happen.
Yeah. And I think it was an advisor to Putin that had made a comment about that and what the United States is doing, and Scott Bessent and Donald Trump. Very interesting there.
Correct. Yeah. I'd seen that too.
Yeah. So I know there's been individuals in the space like Charles Hoskinson, for example, that has talked about, the overall competitor of us, basically. It's not Cardano against Solana or Ethereum. It's us against, the Googles and the Apples of the world, basically, and the banks, essentially. And recently we've seen a bunch of banks are starting to come together to create their own stablecoin, as well as, the Googles of the world, looking to create their own as well. So do you think the opening up the floodgates to TradFi institutions to have their own stablecoins is going to take away, market cap or market dominance, maybe from like the Tethers and the USDCs of the world?
Not really, because I think about, okay, so what's the purpose of a stablecoin, right? It's the same thing as a dollar. A dollar needs to be spent, and it needs to be spent within an economy or an ecosystem. And Ethereum is that ecosystem. And so what I think we're seeing with a lot of these layer ones like Google and whatnot that are being built out, for one, a lot of them they're building on EVM. So they're not connected to Ethereum, but they are using the Ethereum virtual machine, which means that they could tie into it later on very easily. But we're seeing this fragmented system of alternate layer ones that these companies are building for like stablecoins and whatnot, but they don't have connection to essentially DeFi. They don't have RWAs on that chain. So if you have a stablecoin chain, what are those dollars going to want to do? Yes, you can go out and spend them at a merchant, but after they go to that merchant, what ends up happening? They need to go off to pay for taxes. They need to go pay for products. They need to go into that some sort of an investment portfolio. And so it's a lot cleaner to have everything within one ecosystem as opposed to this fragmented system, similar to what we have now, where I have to, now I got to send my stable coins and I got to bridge them over to another chain, which introduces bridging risks. And it just becomes messy. And going back to what I was saying about counterparty risk, if you want to have like stable coins in another country, it's going to be, they basically have to trust a US company, and that introduces counterparty risk. And if you want to enter into some sort of a smart contract, like a trade deal, where you're buying product overseas, I guess maybe you could buy like minerals or something, you could have it tokenized. And so once they actually receive delivery, that payment is automatically processed on chain. And so it becomes very difficult to do that if you end up having counterparty risks, because a counterparty is basically like let's say its most basic form. You and I enter into just an agreement to buy a car, and I give you the money. Well, now we've introduced counterparty risk because I don't know whether you're actually going to give me that car title. But if the car title is tokenized on a decentralized blockchain and the stablecoins are on that same blockchain, well, it just happens instantaneously. There is no counterparty risk because all I'm having to do is trust that the blockchain is decentralized, that the blockchain has no bias or loyalties to anybody. All it's going to do is execute exactly what happened.
Yep. So let's talk about NFTs then for a little bit, because I think you make a really good point. And I've talked about here before how Gary Vaynerchuk has talked about before how NFTs are going to evolve. And they won't just be pictures anymore, but it's going to be representations of ownership, like you had just mentioned with the car title, or maybe like the deed to a house or something, etc. How important do you think this shift is for NFTs, even as just remaining from digital art as well? Do you think they're going to make a comeback?
I do. I think that what we saw with NFTs was essentially, you had this fad pop up and everybody's, they're tokenizing the art. But I think the real value of NFTs is once they evolve and they become something more than just this NFT image that you trade. I think that we could essentially tokenize like car titles. You can tokenize real estate deeds, all sorts of things could become NFTs. And then there's all sorts of different optionality. For example, you could tokenize a airplane ticket. I was just thinking about this last night. So they actually, I had a very short window that I could get from my connecting flight. And what they did was they didn't update my my gate number on the ticket. And so if you have some sort of an NFT that could be fungible, so where you could, as soon as the plane connects to the gate that it's supposed to be at, your ticket on your phone just automatically updates for you instead of you going to the wrong gate. And it's like, oh, well, crap, now I've got to run across the airport to get to the other gate and not miss my flight. So that's just one example off the top of my head for just real world use case that we could see.
Yeah. I think that's the whole purpose of blockchains in a lot of ways. It's just kind of, I think it'll happen not all at once, but somewhat suddenly, when people start to realize just that a lot of these technologies kind of upgrade underlying technologies that just make life a little bit smoother. And maybe people are realizing that because at the same time, we have exchanges, balances for Ethereum at all-time lows right now. Can you tell us what that means, and where we're possibly headed?
Well, I think that we've seen, I want to say it's something like 40% of the Ethereum supply get locked up. And so I believe it's 30% of that is in the staking contracts. And then you have another 5% in the DATs, the treasuries. And then the other 5%, I want to say, rough numbers, are in the ETFs. And so what that signals, and having low ETH on exchanges, is that it signals that if you have a large buyer come in, that they're going to have trouble buying ETH. And the only way that you can find ETH is, I guess you could go OTC, right? So connect to somebody that has ETH that they're willing to sell. But let's assume that we're running out of those as well. What that does is it means that the price has to rise. And the price has to rise to a point at which someone is willing to let go of their ETH to whoever wants to buy it. So it's a shift of a lack of people willing to sell at current prices. And so as demand comes in, the price has to go up.
Yeah. And if you were going to talk to somebody about Ethereum right now being an undervalued play and now being a good opportunity to get in, do you think that would be something that you would say, and that, possibly coming soon? Obviously, people think that the narrative is we're still going to see a bull run and there's going to be price action and movement. Is that how you would currently say, Ethereum is just undervalued still to this day?
I would kind of phrase it as, if you look at how many assets in the world could be tokenized, and you look at how little has actually been tokenized on Ethereum, I would say that it has massive upside based on that alone. This is like, I think where we're at like 30 billion RWAs or something like that total. But I believe it's like $700 trillion worth of assets across the world that could be tokenized. And I mean, we're not even 1% of the way there. So the road of adoption is absolutely massive. And if people are valuing Ethereum at $500 billion market cap right now with such a small amount of adoption, what is it going to be worth if we tokenize a quarter or even 10%? We have $70 trillion worth of tokenized assets on Ethereum. What is it going to be worth? And there's a really interesting correlation between the amount of TVL to the ETH market cap, and the market cap of ETH wants to stay above the TVL market, how much value is tokenized on the chain. So talking about like stablecoins and RWAs. And you can find that on Token Terminal. They have a good way of showing that.
Gotcha. You've also talked about and highlighted AI agents as well. And they're self-replicating on Ethereum, which is kind of wild. But do you think that is going to have an impact at all on RWA and tokenization and, just DeFi applications?
I think it's going to have a massive effect. It depends how it unfolds. What I was kind of alluding to is with the self-replicating thing is if you have an AI agent that you're programming to, let's say that you have an agent that is like a accounting agent for a major corporation, and it needs to build out smaller agents that can do other tasks for it. That's a case of essentially you have users that are creating users at that point. And if you go to ethdigitaloil.com, you can read, it's at the very end of the report, but it talks about how AI agents are going to be one of the most, I believe it's either says one of the most or the largest user of Ethereum. And that's just because they can do things while you sleep. And if agents are going to be doing tasks like managing your personal finances, paying bills, different things like that, and we tokenize everything in the world, well, of course, they're going to be the largest users. If you have agents that are built out for trading and managing stock portfolios, of course, they're going to be the largest user because they're going to be the ones actually doing it. And then the humans are actually just going to be the ones that are monitoring the agents to make sure that they aren't hallucinating or going rogue in some way.
Yeah. Then how big do you think, right now, one of the big topics of discussion is quantum computing, and people specifically talk about it cracking, SHA-256 and Bitcoin's algorithm. Does Ethereum have any of the same issues or worries?
It does, just not in the same way from my understanding. I'm not super well versed in it. What I do know is they are working on implementing quantum resistant, I want to say they're algorithms. But at least Ethereum is finding solutions to it, and they will come before we get quantum computers. And I would say if you look at what happens with big technologies like that, you have, some huge reputable company, like let's say Microsoft, right? They're building out a quantum computer. Their first thing isn't going to be, well, gee, let's go out there and attack Ethereum. That sounds like a great business strategy. No, it's, so even if let's say that in 5 years, they have a working model for a quantum computer, that doesn't necessarily mean that your average person's going to have access to it. These things are really big. They have to be cooled down to absolute zero in order to function. So I think that we have more than 5 years to come up with a solution for it. So I'm not all that worried about it. I think that people are working on solutions to be quantum resistant, and I think they'll be able to get it done.
Yeah. So kind of staying on that topic then, not with quantum computing, but with AI. I think AI is going to be a massive sector just over the next 10 years in crypto and just in traditional markets as well. But how do you think Ethereum can capture any of that excitement, if at all, in any way?
You're saying how can Ethereum catch the excitement with AI adoption?
Yeah, is there any DeFi projects or anything Ethereum can specifically help out with, and that would benefit the network?
I'm not as well versed on AI projects specifically that are being built on Ethereum. I just haven't looked into them. I've been more so just learning about AI itself and thinking about how AI agents could exist on Ethereum. I mean, I think it's a big demand thing. Just speaking in general, I think that AI agents, they allow you to do a lot more. So like for me, for example, I guess they call it vibe coding, where you try to talk to an AI and it spits out some code for you. And so what that does is it massively increases a person's productivity. And so if you have a lot of AI agents doing things on chain on Ethereum, like building applications or building a video game, like let's say that you just want to build a video game on chain and you're having these AI agents work for you, what it does is it massively accelerates the adoption. It massively accelerates the user base on the Ethereum blockchain. And I think that's going to be the massive driver of it. It's a productivity accelerator because you can get so much more done as opposed to just sitting there and trying to diagnose code yourself. You can just go in, load the code into something like Claude Code, and here's your little bug, and then boom, it's done. Whereas, you might have sat there reviewing code for 30 minutes or an hour trying to figure out where this bug is. Or, I mean, it can even write an entire code application for you in seconds. So I think that's going to be the massive driver, is it builds everything for us, essentially, very, very quickly.
Yeah. Now, with the attention being on RWA and things like AI agents and all this, do you think Ethereum has the best possible shot at capturing that adoption, or do you think, Solana's or Sui or Avalanche or Cardano, or do you think they're going to have a good, decent spread of market share? Do you think Ethereum's going to dominate in that respect?
I think Ethereum will dominate. I think that the reason for that, for one, it has to do with network effects. The more users that Ethereum has within the system, the more appealing it is for somebody else to build within the Ethereum ecosystem. The analogy that I like to use is Amazon, for example. Let's say that you're a seller, right? So it's basically like an L1, just some random L1. You're starting from scratch, right? You have no traffic coming to your website. You want to start selling things. Whereas if you go to Ethereum, where you have this massive ecosystem of users, you have a larger traffic base to where you can get traffic to your product. So like if you're selling on Amazon, the reason that people go to Amazon is because all the other sellers that are on Amazon, if you want to buy let's say you want to buy coffee off of Amazon, and then you look down and you see another product from somebody else, well, that traffic is drawn to you. And so you get a similar network effect within Ethereum where, if the stablecoins are there, the RWAs are there, all of this economic activity is happening within the Ethereum ecosystem. It's very easy and very appealing for somebody to tap into that traffic and kind of bootstrap their own business, as opposed to starting on one of these very small chains that doesn't have anywhere near the liquidity depth or user base that Ethereum does.
So how important do you think it was when Ethereum upgraded and moved from proof of work to proof of stake? Because now you have institutions like Larry Fink, BlackRock, SharpLink, Gaming, I believe it is with Joe Lubin, and many others are looking to start staking Ethereum, which is obviously going to give them yield, which is something that you can't really do with Bitcoin. So how important do you think that was, not only for the network to be more efficient and more green, et cetera, but only for, the ability to earn a yield now?
Wall Street loves yield. If you can tell me that, hey, we have this asset that essentially captures value by being the security collateral for global infrastructure and securing the ownership rights of all the world's assets, and we're barely at the start of it really being adopted, and it's going to pay you a yield, that's very appealing to investors, because you have this asymmetric upside opportunity, and then you have the cherry on top, which is that additional 3% yield, or in some cases you can get more if you do like DeFi strategy type stuff.
Yeah. would you recommend diving into some of the DeFi stuff? Because, like you said, there could be protocols built on top that offer better yield and lending and borrowing situations, scenarios like that. Is that something you would recommend people to look at to earn better yield, or maybe just say stay away and in risk of like impermanent loss?
I would say yes, but also be very careful in what you do. I am not extremely well versed in all the DeFi strategies to earn higher yield. I'm pretty basic. I run my validators and earn staking rewards that way. But I have dabbled a little bit with liquid staking tokens and ETH earning yield, so that there isn't that impermanent loss. Because basically, you have a little bit of a premium because it's a liquid staking token, and then you have the ETH price. Well, I don't really have to worry about either of them massively depegging and getting some sort of impermanent loss. So that seems safer to me. It's really going to just depend on what instruments you're going into. And I would say, just to be careful, don't rush into something just because it has a very high APY. There's a reason why it has a 300 or 500% APY. And one thing that I look at and why I'm so conservative with going into like DeFi stuff is that I look at the potential opportunity loss instead of looking at the potential APY that I could be getting. And so what I mean by that is, if I have a massive amount of Ethereum and then I stick it into DeFi and I lose it all, well, holy crap, and then it fully gets adopted, however many years down the road, and it's sitting at $80,000. Well, that's really how much money I just lost because I wanted to earn a few extra percent in some DeFi protocol that I maybe didn't fully understand, and there was some sort of an exploit that happened.
Yeah. It's better to give up losing, if you have 10K Ethereum and you're chasing a 10% yield, you're still not going to make that much. So you're risking losing it all just for a little bit, basically. So totally get that.
Yeah, exactly.
Yeah. So do you think like the Robinhoods, I know I have one of my portfolios that I use just to diversify is I have Bitcoin in a Roth IRA with I Trust Capital, and they now have the option to be able to stake Ethereum or Solana. I know Robinhood are doing similar things. Obviously, you can do that on centralized exchanges too, but would you recommend people to not do that and not, take them off the exchanges and possibly look at, DeFi, staking, etc.?
I mean, if big financial institutions are offering yield, I find that in a way less risky than some DeFi. I mean, there's a lot of DeFi out there if it's very reputable, like Uniswap or like these platforms that have been around a really long time. Your smart contract risk is going to be a lot less. You still have that risk of impermanent loss if you get into something with, I don't know, like SUI and some sort of a liquidity pool like SUI and Fartcoin, for example. And one of them goes way, way down. It's like, oh my gosh, it's this impermanent loss that I didn't know about. So, I mean, that risk is still there. But for the average person, I would say just stick to the biggest players, the biggest entities, the biggest financial institutions you can, because they're going to be more reputable. So like if you're going to be staking with like Robinhood, okay, they're a big reputable entity. If you're going to be using a DeFi platform like Uniswap to earn some sort of a yield, okay, they're a well-established big business. That doesn't mean they can't go under. I mean, we all saw what happened with FTX. They were massive and they went under. But I still find that to be less risky than if you find some DeFi protocol that nobody's ever heard of and it's got 1,000% APY. That's going to be a lot more risky because their contracts aren't going to be as time tested.
Yeah. So shifting gears a little bit, you've talked about, even though despite gold is having a good crazy run up right now and Peter Schiff is definitely happy, you would still
Yeah.
You would still tell people that Ethereum is a better investment over gold. So to anybody watching right now that maybe is trying to learn about Ethereum and maybe, they are gold holders, et cetera, what would you say to them?
Well, I think that gold is it's a good portfolio allocation. And with a proper balanced portfolio, you should have exposure to multiple things. So in crypto, I only have exposure to ETH just because I view it as being one of the safest bets. I mean, if you had to pick two, it's Bitcoin and ETH that are the two safest, right? They've been around the longest. They've the largest adoption. But I tend to stick with ETH just because I see the massive adoption with actual utility and demand as we upgrade our whole financial system. So, I mean, if you have like a 2% allocation to gold or 5%, I think that they should have a 2 to 5% allocation to Ethereum to get the exposure of that asymmetric adoption that we're going to see with the world just tokenizing and rebuilding all of our systems on top of Ethereum rails.
Gotcha.
One thing people miss with that is, so with basically if you have like a 2% allocation on something and you get a massive asymmetric return, like 100%, it increases your average annual APR, meaning that, if your portfolio is averaging like 10% and you have like 2% allocation to something that does a 10x, that dramatically increases your average annual return. And so that's why I say a 2% allocation can help your portfolio massively outperform.
Yeah. So right now, I think privacy is becoming kind of most, very relevant at the forefront right now. Zcash has made a resurgence. I know Midnight is partnering with Google, and Vitalik recently released an essay, I think in April it was, when he talked about privacy and the importance of it. Can you talk about how privacy is going to look on Ethereum in the future?
Well, I think, I think ZTake, the privacy tools that we're going to be building it's critical because like large financial institutions, they kind of have a paradox. On one hand, regulators demand transparency for like anti-money laundering requirements and things of that nature, but then they also have privacy rules that, if you're worth $100 million, you don't want that to be advertised to the world because now you're a target. Now people are going to be going after you. And so I think that these systems for privacy are being built out and they're going to be adopted. And that's going to be a massive game changer for Ethereum because now it's going to make financial institutions much more comfortable to build. And so it's a tool, in my opinion, it's allowing for privacy, but it's also allowing for transparency. So like if you're listening and you don't understand the privacy stuff, what it does is you have these zero knowledge proofs. And so basically, like let's say that you go to a bar and you go to the bartender, you got to show them all your information, right? You show out the ID, there's a picture of me, there's my address, there's my age, everything. Well, the zero knowledge proofs, what they'll be able to do is they'll verify, yes, this person is over 21, and they won't reveal any of the additional information. And so that's going to be massive because you're reducing all that exposure.
Yeah. And so far, the technologies, ZKs and others that, Zcash and others have implemented, Tornado Cash, as the example, the argument in court there is code is law. So in that respect, when you're hiding information, et cetera, and the government says, that's a illicit crime, they're basically arguing that, well, it's not us doing a crime, it's just a code. And that's what the language, represents. And that's, basically a law. So how important do you think that is the future of just continued regulation, basically, codifying certain things as illegal or not?
I mean, it's kind of tough because on one side, I see the government side of it where, they want that transparency. They want to make sure that, if you're sending funds through like a Tornado Cash, that this isn't some sort of a money laundering operation from a cartel, for example, or a terrorist organization. But then on the other side of that, if you're just an end user and you're putting funds through Tornado Cash because you don't want people to know where your money is going or how much you have, I think that it's kind of like that tool specifically is kind of a workaround for us not having full privacy infrastructure built out and adopted, which is, I mean, being worked on, and we will have that going forward. But I mean, like I said, I see both sides. I think that privacy is very, very important, though, and yeah, I don't know if I answered your question there or not. Sometimes
No,
I
you're
tend to
good.
ramble.
No, that's all good. It's very interesting to hear, your thoughts on everything. No, I guess a couple other questions I would have then just about Ethereum is, its past is riddled with, I guess, a lot of big storylines and changes and events. There was a ton of founders at first who broke off because of disagreements and started their own chains. There was a lot of changes that it went through itself via the protocol and its network. There's Ethereum Classic that exists now. You used to be able to mine it. Do you think that, the roadmap to get to where ETH is now is irrelevant and the only thing that matters is the future? Or do you think that there's maybe still like issues that need to be rectified with Ethereum that could slow its adoption down in the future?
I mean, it's hard to say. I mean, I don't think that, like, as far as talking about the past of it, every company or every product or new technology will have some bumps. I think Ethereum's past is that of overall a very solid and trustworthy reputation, because if that wasn't the case, we wouldn't have over 80% of tokenized real world assets and the majority of stablecoins. Like, if you're going to put money on a chain, like, that is the most real vote of confidence that you could possibly have. And so that's why I tell people, like, stop looking at all these numbers that all these other chains are talking about, where and this is what drives me nuts about other chains, is they'll try to manipulate data. They'll say, well, look how fast our stablecoins are growing. We have grown at 1,000%. We've gone from one stablecoin to, now we got 10. So we're outgrowing everybody. And it's like, well, they manipulate the data. It's like, okay, well, just where the most. It's that simple. Where all the, you look at Polymarket and how good they are at predicting things. That's because it's capital. Capital is truth. If you want to know the truth, follow the money. And all the money, or the majority of the money, is on Ethereum. And so, I mean, that's as real as you can get. And that's a vote in Ethereum's, in the confidence that people have in the past of Ethereum. Going forward, I mean, it's hard to say as far as bumpy roads. Anything could happen. But I think that it's decentralized, and whatever we face will come together as a community, and we'll find solutions to whatever those bumps may be.
So can you maybe talk about the differences between Ethereum and Solana? Because I feel like Wall Street right now is taking a big look at Solana, as they have for the last couple of years, because it's positioned as this, maybe more efficient and faster Ethereum, and the fees are lower, etc. But why would you say Ethereum is still a better and a safer bet?
Well, I can say one thing is MEV. So one advantage to Robinhood and why they built a layer 2 versus building on Ethereum, on Solana, is that that gives them control over the MEV, meaning that Solana validators can't go out and reorder blocks to extract profit away from people that are trading. That's a big deal, because Robinhood's business model is payment for order flow, meaning that they say that you have a free trade, and so there's no commission. You place that trade, and they figure out by reordering the trades, and they're able to extract a profit. If you have another entity like Solana that's reordering blocks, and because I believe I'm like 90% sure they don't have a public mempool, meaning that you're not able to see what's going on with MEV on the chain, that's a really, really big risk. So I would say that is one massive disadvantage for anyone looking to build on Solana. And also, if you look at Solana, is extremely hardware intensive. So you basically need data centers in order to run their hardware. That's one reason that they're so performant. Like they're basically a layer 2 that doesn't have the exit guarantees of Ethereum's decentralization and security. So it's gonna be very difficult for them to truly decentralize because you need massive hardware requirements, and from my understanding, you need a massive amount of like Solana to be able to stake and actually be profitable. And so, I mean that not everybody has a million Solana to $1 million worth of Solana. I don't know the exact number. I know it's extremely high. And so that is a bottleneck for centralization, which introduces counterparty risks. I mean, for example, if you have a bunch of Solana that's in data centers, I mean, that's you need, if you're talking about global infrastructure, it has to be wartime resistant, meaning like if we go to war, like global war, like bad stuff happening, like you can't have it centralized and have global financial structure go down if a data center is destroyed or if multiple data centers are destroyed. It has to be decentralized across the entire world and not susceptible to those types of attacks. And I find it very suspicious how they are able to just coordinate in a Discord whenever they have a bug and silently patch things. Like, to me, that sounds like centralization.
Yeah. I think we've all seen, the conversations, discussions, some of the memes about the centralization aspect of Solana, the fact that they go down. There's large hacks on it, which, there's also happens on Ethereum and stuff like that. But you had mentioned, basically you won't see an adoption because people don't see it as this safe haven, basically, as they now view Bitcoin, as they've always viewed gold or maybe silver as well. But what do you think it's going to take to get those same investors to realize the same thing about Ethereum, is that you can view it as, something without counterparty risk, and you can have it in a portfolio to, hedge against when Donald Trump tweets or we have a trade war with Russia and everything crashes like an insane amount. Like, when's that going to happen?
I think that's two parts. I think one part of it is just people learning about it. The average person still, like most people have heard of Bitcoin, still quite a few haven't heard of Ethereum and fully understand it. So I think there's that aspect of just people learning about it. And then I think the other part of it is just going to come naturally, like as things are tokenized, as stablecoins are built, as we convert the New York Stock Exchange from the New York Stock Exchange to this decentralized trading system. People are going to say, well, what's securing all of this infrastructure? It's ETH. ETH is the collateral because of proof of stake that is securing all of the world's global financial system. And so they will naturally start to view it as a safe haven, just because they're like, well, there's $100 trillion worth of tokenized assets and infrastructure on this system. We trust it to secure all that value. I want to own some in my portfolio.
Yeah. And how important do you think Vitalik is to the success of the chain and making partnerships happen and things of that nature? Do you think he still has a massive impact on the direction, or do you think it's just so big and so decentralized, there's so many other builders and developers on it, that he doesn't really have that big of an impact or say?
I think he does have a very big impact. When you think about Ethereum, you do think of Vitalik, just kind of like you think of Bitcoin, you think of Satoshi. If Satoshi woke up and he started giving his opinion on things, like people would listen. It wouldn't necessarily mean that, well, now it's centralized and, if this one person ceases to exist, the chain's just going to disappear. I mean, if you look at Apple, Steve Jobs was a huge driver of Apple. He passed away and Apple still exists. I'm not saying that Ethereum is a company, but you do have a similar like technology being developed type of aspect to it. So he does have a lot of weight in what he says, and he's very, very important to the ecosystem. If he ceased to exist, though, Ethereum would continue on because it is just so decentralized. There's so many people building on it. It's not dependent on him, but he has, like, people listen to his voice, if that makes sense.
Yeah, absolutely. Now, what do you think is like one of the most things that excites you the most about Ethereum? Whether it's, building on it or using any DeFi protocols or just the direction, global perception of it. Just what is the most exciting thing about you to ETH right now?
I think just seeing the technology be adopted, to me, it feels like being a part of when the internet, like just in the early days, like the 90s of the internet, just seeing it transform the world is just really exciting to me to watch, just all the developments. Yeah, that's pretty much what it is. Just seeing the adoption is very exciting to me, and what people are just being creative and just coming up with new ideas. Like I saw a game that was built on Mega ETH, and I remember I sat there, I was just in shock because the little in the bottom left corner is just tick 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 tick, and those are on-chain transactions just happening instantaneously as this little character was hopping across the road. So just seeing like things like that, just I'm a technology guy. I love technology, and it's just fascinating to see it be adopted and all the use cases.
Yeah. I normally ask this question to all my guests, but mostly sometimes in the beginning of the interview. But as of late, I've just been kind of diving in. But how did you get into crypto in general? You said you're a tech guy. How did that happen?
So I was originally in real estate. I flipped a few houses, and then I worked with selling properties to like investment companies. And my best friend's dad was involved in real estate too. So I went from there to learning about crypto. I believe that was like 2016. And then I basically just moved all of my real estate capital into crypto. And then I was also trading. So I had been trading it was around the same time, 2016. I kind of did the rough start where, as most people do with trading, where you use a little bit too much leverage. But I ended up meeting some very talented traders that had taught me a lot about trading, and that's kind of where I'd been. I don't do day trading as much anymore. I used to do futures trading. And futures trading is just extremely difficult because you're trading against machines for intraday stuff. It's extremely stressful, and it's like, I remember times where I would look away for a second or two, and I would miss the trade setup that I've been waiting for. So I shifted from that into more swing trade types of investments, and I've done very, very well ever since I did swing trading. So that's anything from, a couple of weeks to holding for months.
So do you swing trade just with Ethereum or on Ethereum, or do you branch out with anything else crypto related as well?
Mostly. So I did trade Bitcoin a little bit, mostly then started trading Ethereum, but also stocks. Like, I'd gotten into NVIDIA before they kind of exploded with the GPU demand. Like, my strategy with trading it's different than your average person. It's a combination, like the technical analysis stuff. I do that a little bit, but I also do fundamental analysis. So like I'm looking at, okay, what's the narrative here? What could this technology look like going forward? And so if there's a bullish catalyst, a bullish fundamental side to it, kind of like NVIDIA, where I'm seeing all this GPU demand that's going to come from these LLMs. And then I'm also looking at technicals that are saying, yeah, this thing could go up. And I see that alignment, then I'm like, okay, this is a really good trade opportunity, really good investment, as opposed to like, here's a line, buy. I want to see essentially uncorrelated, I don't want to say indicators, but I guess indicators. Like fundamentals is completely uncorrelated to technical analysis, for example. And so if I have both of those telling me it's going up, well, that makes me very confident.
Yeah, I think I would say I'm very similar to what you do as well then. What's your time horizon with these swing trades? Is it, over a year, 2 years plus, et cetera? Or is this like strictly like a 6 month or less trade that you're looking to get in and out?
It really depends. I guess you could consider Ethereum a really, really long-term swing trade for me. But I mean, I would define anything on a swing trade basis as like if you're holding for more than a couple of days. Like intraday is basically like you open a trade on Monday and you close it on Monday. Swing trading is more anything from, I don't know, like a week maybe to you can hold it for months. And then really, I guess if you're getting into like longer term stuff, technically that's more just long term investment. But I kind of have the same mindset approach as a swing trade, if that makes sense, for the investment stuff.
Yeah.
Other than that, it's just like index funds that I invest in. And then if I see a really good opportunity, I'll deviate and I'll buy NVIDIA, but like the majority of it's in index funds because I think that this NVIDIA trade setup will allow my portfolio to really outperform.
Mm-hmm. Nice. Do you think there's better opportunity to earn yield and compound that way in cryptocurrency than there is in the stock market? I know people have dividend portfolios, etc. So would you still go with crypto in that respect, or would you stay traditional?
As far as yield as like interest rates?
Just different ways to make,
Right. I wasn't sure if you meant like trading. Crypto definitely has higher interest rates. But again, just you want to be careful. If the APR is too good to be true, then it's not really worth it. You're kind of gambling and you're risking the whole bag versus if you're getting like a 10% yield. Well, that's great. That's, and it's on a really reputable platform and you're not in two coins that could suffer like really bad impermanent loss, then it's great. It just kind of depends on the situation.
Is there anything you have your eyes on right now that you've been setting up in regards to any swing trades or, something that you see riding into 2026?
I guess you would say Ethereum. And really, I think pretty much everything will probably perform really well because I follow like the global liquidity cycle. I don't know if you've seen my posts on that. But basically, kind of my theory is that during COVID, we saw a lot of money printing and the Fed had to raise interest rates in order to bring, they raised interest rates and they introduced quantitative tightening. So they started selling off assets from their book. And what that does is it sucks money out. So basically they dumped a bunch of money into the system during COVID, and then they started sucking that money out in order to bring inflation back down. And so we hadn't really seen that before within crypto. Up until that point, it had been a lot of very easy monetary policy. And so now we're just getting into that easy monetary policy again. And so this whole time that like Bitcoin and Ethereum have been going up, it had been through a period of restrictive monetary policy. And now as interest rates start coming down and Fed Powell just mentioned quantitative tightening ending, I expect that the whole Bitcoin 4-year cycle thing is kind of a myth and that it's just aligned with the global liquidity cycle. And so all this money that's about to dump into the system is going to cause Bitcoin and Ethereum to both go up.
Yeah. Raoul Pal recently said something very similar too. I think
Right.
that sentiment is starting to change a little bit for sure. So I think it was your pinned tweet where your price target for Ethereum.
The 80,000.
$80,000. Yeah. Is that for this cycle? Is that your top for Ethereum this cycle, or?
Yeah, I mean that's my top end target. I think and that's just based on market geometry, just the long-term channel, and the fact that like fundamentally, like if we're going to see massive adoption, the only like what better time than right now where you have the pro crypto president that's pushing, so they want trillions of stablecoins. I believe they said it's 4.7 trillion by, I want to say it was 2030. And then you have RWA estimates anywhere from 2 to like 50 trillion by 2030. So, I mean, we have this trend channel that is showing that we could get there. You have massive Wall Street institutional adoption finally happening and all the regulatory clarity like the Genius Act, Clarity Act that's getting pushed through. And then you have the Fed that is going to be lowering interest rates and possibly introducing quantitative easing. I think you end up in a situation where it's really not that unrealistic that Ethereum can go anywhere from 30 to 80,000 with by January. I believe I had it at January 2027. But a lot of that, it like people see that chart and they just think that it's just some crazy prediction that I'm putting out there. But it's really like there's a theory behind it. I'm looking at the Wall Street adoption. I'm looking at the global liquidity and what's happening with the Fed. And then I'm also like looking at this long-term trend channel of where we could be going.
Yeah. Well, Ethereum right now, whatever it is, 4K, when it was $6, that seems crazy. So,
yeah, right.
I mean, it's definitely possible. And like you're saying, with the amount of eyes on it and the potential adoption over the next, couple of 5-10 years or so, I think it's inevitable.
Oh yeah, 80K is absolutely inevitable. The timing just depends on Wall Street, basically, like how fast they tokenize assets.
Yeah, and I think like global regulation as well.
Right. Yeah. Exactly.
Yeah. So Leo, man, or where can we find you actually? Just before we wrap it up with any last words, where should the audience go find you on social media?
So you can find me on Twitter. It's going to be L3OLANZA, and I believe I have a link to my YouTube in my bio on there. I don't know what my YouTube handle is. I'm mostly on Twitter these days.
Perfect. And then anything that we maybe didn't touch on that you'd like to tell the audience before we wrap it up? I would just remind people to follow the money, don't like crypto is one of those rare opportunities, kind of like AI. If you're able to buy AI stock or something very early, or like with any technology that's rapidly going to be adopted, it's one of those opportunities that you really don't want to screw up by gambling, by going off and buying some scam coin that somebody created because you want to. I mean, if you want to do that with $100, fine, but don't put your whole investment life into something like that. Buy the blue chips and hold for the long term. Watch adoption and look at where the majority of assets are being tokenized. Because if all the world tokenizes, if the majority is tokenized on Ethereum, and you have these other smaller chains that are saying, look at these, opaque metrics that we're bragging about because it's 1,000% higher than somebody else. It's like there's probably some funny business going on there, because I mean, at the end of the day, if you have 100 trillion tokenized on Ethereum, and you have people saying, well, that doesn't matter. Well, that's kind of the whole point of blockchain, right? That's the whole point of a smart blockchain is to tokenize assets and upgrade infrastructure. And if that's not happening on the chain you're invested in, it's meme basically. It's no different than a meme stock. And I would just caution people, like don't miss the bigger opportunity in hopes of like a lottery ticket, essentially. Yeah. Well, I couldn't agree with you more. Leo, I appreciate you coming on the channel. Guys, make sure to go follow him. Like this video, share this video, follow us here at the Coin Zone as well.